I got a question for you. Do you have a system that works for you? Do you have a system that you can use that makes you profitable or makes you a break-even trader? Every trader needs to know this. They really need to know this system. I've got a system that I've been using for over 30 years. Guys, I've been doing this for a long time, and I know that it works. It always works. If you're interested in finding out about the system that I use to make me profitable in the stock market or trading Forex or anything for that matter on any time frame, come into the office with me today. Let's go and have a look at how I trade Forex and the stock market or the indexes or whatever else it is that you like to trade. I'm going to show you my simple daily process that keeps you profitable and keeps you from losing money in the stock market. But what you have to understand about the stock market is it's not all about the system. It's very much about your psychology and what's going on inside that little head of yours. That's what makes you a good trader or a bad trader, is how you handle that psychology on any system that you prefer to use. I don't advocate that you should change the system every 5 minutes. I don't advocate that you should get a new system or just follow my system. What I'm showing you is just my idea of how we trade. And with 30 years of experience behind me, it has worked. I know what works for me. Today we're going to go and have a look at the charts, and we're going to see on those charts how we trade basic support and resistance. We also use supply and demand. We also use Fibonacci, but my favorite is to use the support, resistance, and or trend line support and resistance. So trend support and trend resistance. And if you've ever traded with that before, you'll understand what I'm talking about. I take away all the indicators on the chart. I don't use all these extra indicators on the chart, because the extra indicators on the chart, what they do is they confuse you. They confuse the issue, because when you want to take a trade, when you're ready to take that trade, if you've got too many indicators on the chart at any one time, what's going to happen is you're going to look at that trader and you're going to go, should I take this trade? Probably not, because that indicator is working against that indicator and it's just stopping you from taking the trades. There's no perfect strategy. There's no perfect system in the stock market that makes you a profitable trader, but your psychology can make you a profitable trader. And what it's all about, guys, it's like if you flip a coin 10 times, 5 times you're going to win, 5 times you're going to lose. Point being, you need to lose 1 coin for every loss, and you need to win 2 coins for every win. Or maybe 3 coins, or maybe 4. I don't know. Depends how good you are. The thing is, when you're winning in a trade, you need to add to the trade. And when you're losing in a trade, you need to get out as quickly as possible and take your stop loss. Don't be moving your stop loss out unless you're sure that the trade has not invalidated. Now, change the name of stop loss to invalidation rather than stop loss. And then you might find that it actually helps you or works for you, or your mindset or your psychology might change a little bit, because when you look at it as an invalidation, you look at it and think, well, effectively, if I was to take this trade now, it would be invalid. Wouldn't work. It would be what we would call a rubbish trade. Now, to get around this whole scenario of should I or shouldn't I trade, you just need to have a system or an edge that you can use, but only one system, which will help you in the stock market or the Forex trading as to when you should get in and when you should get out. And that's what I'm going to show you in the charts today, is when to get in, when to get out. That's what's important. You know what, guys? Go down to the description, get my free Forex book. Got a Forex book in the description for you there. It's totally free. It's a PDF, and I'm not asking you anything for it. And also, visit the secret blog. Visit the blog every single day. I put a trade out, a free trade. It's not advice. It's just a trading idea so that you can follow along and you can see how other people actually trade in the stock market. Because, guys, trading is risky. 80% of traders lose money. In fact, probably 99% of traders lose money, but we don't like to say that, depending on what time frame you trade on. Now, I did a little research recently as to what time frame you guys are trading on, and I'm very happy to see that most of you are trading on the 4-hour, and there's a few of you that are swing trading on the higher time frames, but there is a large percentage of guys that are trading on the 5 minutes. And I hope that you guys know what you're doing, that you're mediocre or qualified traders, because trading on the 5-minute charts has proven that 99% of traders lose money on the 5-minute charts. It's very difficult to trade at that speed if you're a beginner. So if you're a beginner, I hope you're not trading on the 5 minutes. Take your time frames up a little bit and slow it down. Rome wasn't built in a day. You can't learn to trade the stock market in one day. Fear is a very important aspect to trading in the stock market. Fear is one of the biggest factors, and if you can get over your fear and you can become a good loser, you'll become a good trader. So after we've looked at the charts, we'll just have a little look at how you can get around that psychology and how you can trade just a little bit better. But first, let's go and check out the charts, guys. Every trader needs to know the strategy to win, and it's actually quite simple, really. If you think about it, all you've got to do, we're on gold at the moment. How did I end up on gold? I really don't know. Here's some market structure for you. Now you can see on the market structure, if you look at what's market structure, it's that. Then there's another one over there where you could have bought, and there's another one at the top here where you could have actually bought. Well, you're going to buy. This will come back down to here. So there you go. That'll come back down into there and it'll bounce out. That's a bit of market structure for you, straightforward. How do you determine this without drawing these little lines in? Quite simple. You can draw a trend line straight up the side here, and you'll see it balances out in the same points. Don't worry about the trend line being in the exact spot or the exact point or anything like that. It is nice if it catches 3 points along the way, but it's not imperative. At the end of the day, what you're just looking at is you're looking at the trend and seeing where it comes out. So this is without using your support and resistance blockies like we normally use, but we don't need to use all kinds of drawings on our charts or anything to that effect. There was a big resistance here. You can see it broke through the resistance and it's gone out, and that's simply how it works. Because if you take that what was a resistance and now is a support. Okay, so how does that work, guys? If you look at this, you can see clearly that this went up. It was a resistance. It was a resistance, but then it broke through the resistance, turning this into a support. It actually came back, retested it, and continued up on its way. And that's the simple basis of support and resistance. Now, you know as well as I do that when we draw our support and resistances in, we normally go to the day chart. Now, how do we do that? What we do, we take it from the 4-hour, we go onto the day chart. Now, on the day chart, you can now take this onto a line chart. Now, I always put it on a line chart because a line chart, you take the levels from the closing prices, and the closing prices are where you get your levels from. So take this, draw it in here. There's your main daily support level. Okay, then what we do is we draw in our major resistance level, and there isn't one. We've gone through it. Clearly, we've gone past our resistance level. We don't have one. So what do we do now? We're at a high, probably an all-time high, or it would appear so if you go to the left. What we do in a case like this is we say, okay, this could be a double top. Look at that. There's a top there and there's a top here. So you've got to be very careful of this becoming a double top. We're on the candles. We'll go back to the 4-hour. Let's just go and see what the 4-hour looks like on this specific item that we're dealing with here. And this is where we were just now. We were on the gold. All we can do here, guys, we can't really determine where the short is unless we get a candle like a pincer top like this, which clearly points out that it's lost momentum and it's going down, and it matches the other top of the resistance on the left here, in which event you've got a double top, and then you can say that's your resistance, and you get a nice red candle going down, and you can take that down. Your next level where there's some supply of money would be down here. There is a bit of supply of money at this area down here, which is on your structure, and that would tell you that you could go long again. So at that point, you don't have to wait for it to get all the way down to this main support at the bottom here. You use the support which is in your system, and you wait for it to come down into that support and travel back out again. So this particular item would be useful in that scenario. Now, if you go, let's have a look at this. This is the Euro, Great British Pound. Now, where's your market structure here, guys? The market structure here is clearly bearish. So you've got a bearish structure on this
particular product. Now, if you remember on the euro, we were looking at longs the other day. Now, if you go to the day chart and you have a look at this day chart, by the time you guys see this would have moved on, but I'm using this just to show you what's going on. We could do this on the 5-minute chart as well. I did notice that a lot of you guys are trading on the 4-hour, so therefore I'm using the 4-hour. There is quite a lot of you trading on the 5-minute as well, but believe me, if you're a beginner, you really don't want to be trading on 5-minute charts, because 99% of traders lose on 5-minute charts, and it's actually much better if you're starting out to trade a little bit on the higher time frames and get a feel for the market before you start trying to run before you can walk, let's say. Hey guys, if you like these charts, I did leave a link for you in the description below, but like I say, for me it doesn't matter what charts I use, as long as I've got a chart with some candles on it and a few lines and whatnot, I'm perfectly happy. But these do have a hell of a lot of indicators available to you that you can use, automated indicators, lovely indicators. It's actually quite nice stuff they've got. It's very nice for showing you guys how to trade as well. Anyway, so we've taken it to the day chart. Let's take it to the line chart and just have a quick look. Now you'll see we used to have what was a support and it's now become a resistance. That's simply just become a resistance. So there's no point in drawing any more resistances in. That's become the resistance. And once again, there's not much support down here, so there's not a hell of a lot going on as far as that goes. This is probably going to go back, retest, and go down. I'm going to put it back on the 4-hour so we can just see it a bit more clearly, see clearly what's going on here. So you can see previously it broke through its initial resistance at the top here, support at the top here, turning it into a resistance. So there was a resistance up here, but it broke through that, came all the way down with a big red candle. So that's what inspires us to take a short. It came down and it actually confirmed it with that little doji that sort of fell its way in there, came all the way down, created this support level, which it sat on for a while. It's support, 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 support. And at this point, I was actually looking at the possibility of taking a long trade, but unfortunately it broke through this support level and this has now become resistance. It has gone back, tested it a couple of times. Effectively, this is a short, and what it might do from here, if you don't want to take the short from here, it might go back up to this resistance and then find its way down from that point. So that's how we trade with support and resistance. So this is now was a support, broke through. Normally when it breaks through, when it's a breakout, when it breaks through a support level or a resistance level, it's actually maybe better just to wait for it to retest, but I don't bother. I generally, if it's a red candle out, I'll take the short and just go with it, because my stop loss is up here above the level and I'm not really too concerned about whether it comes back and tests this or not. Many people are. Many people feel that it's really important to wait for the retest before you trade. You might be waiting for retests until you're blue in the face. For example, this one didn't really go back and retest. It actually just gave a nice doji telling you can carry on with a short. In many events, that's like a little pincer top up there, which tells you it's going short. You don't really need to wait for this retest. You could have just taken it on that red candle and off she goes. So that's pretty much how we do it. No need to wait and mess around and wait for the stars to align in the right and the stars to align on the left and the sun to come out in the morning before you take a trade. Just go for it. And one of the big things in trading is to learn to go for it. That's the psychology of it. When you see it, take the trade, go for it, take the chance. It's a 50-50 game, one way or the other. All you're doing with this system is managing your risk.
Now we've looked at the charts. Now we know how we trade, and how we know how we trade the support and how we trade the resistance. That may be a little bit of following the trend, and the trend is your friend. But how do you get around that psychology of being able to take a loss, being able to look at a loss and just flicker it out of your mind? Well, it's very difficult. Nobody can really do that, because if you take some pain, you're going to be angry. You're going to take the pain. The emotion is going to be high. Just as if you take a win, your emotion is also going to be high, just in a different way. When you are trading, do yourself this favor. Ask yourself how much you're prepared to lose or pay for that trade. And if it's the $100, say, okay, I'm going to trade $100 on this trade. This is how much I'm prepared to lose on this trade, $100. Put your stop loss down at $100 away from where you need it to go, if it needs to go that far, and then buy your trade based on that, with the probability of making, say, $200 or $300 or whatever on that trade. Don't keep your stop loss too close just because you don't want to lose the money. Make the trade the size that you can afford to take. You get loads. Most brokers offer mini trades. So for example, you don't have to trade the whole lot. You can trade mini lots, and you don't have to take massive trades every time you trade. So watch out for that, especially on the Forex brokers. Now, if you trade within your means and you know that the trade's going to cost you $100, then you accept that. When it gets to $100 and you've lost the $100, don't move the stop loss away and now pay $200 if the trade is invalid. If the trade becomes valid for another reason, then firstly, your stop loss was in the wrong place. Secondly, you took the wrong trade. And thirdly, yeah, I'm not even going to go there. If your stop loss was in the right place, number one, then that $100 should be taken out, and you should not be adding to that trade no matter what. Pay the $100, move on to the next trade. That's how we operate. If you keep adding to that loss, you know what? The loss is just going to get worse, because now you're trading into an invalid trade that you would never have traded into in the first place. If you trade within your means, if you trade within what you can afford to lose. So if you can afford to lose that $100 and you lose that $100 and it's not going to make any difference to your day, you can go on to make $300 on the next trade and you'll be okay. But if you can't afford to lose that, if you risk say $1,000 and you can only afford to lose 100, the emotion is going to get too high. You're not going to want to take that loss, and you're going to hold on to that trade, and that's what's going to affect you at the end of the day. So be very careful of holding on to those losses on those big trades. That's it for this particular video. Thanks for watching. Don't forget, next video we're going to talk about how trading without indicators can make you 90% profitable. You don't need indicators on your charts, guys. So I'm going to show you that in the next video, which is coming on Wednesday. Yeah, Wednesday. So keep your eyes peeled. Watch out for that. Don't forget to watch the last videos, guys, because if you haven't watched my videos, there's a whole series of free information on there that's going to show you how to trade the stock market properly. Cheers, guys. Thanks. Till next time. Bye.